because it takes in traditional kind of free market ideas of competition, the use of energy. I mean, it's just such a miraculous white paper. And if anybody hasn't read the Bitcoin white paper by Satoshi Nakamoto, I mean, it's a must read. It
I haven't
really
even
is.
read it, honestly.
Wow, that's
It's
horrendous,
funny.
Kroic. Like,
I'm not the type to really sit and read things. I kind
yeah,
of like to
I
build stuff more
I
than
kind of
read.
get that.
Yeah.
But anyway, anyways, it's and there's a lot of theories on who that is, and that's a whole other conversation. And I think it's just a group of cypherpunks, or
Right.
that are my other theories. And we talked about this in the other show. And by the way, we've done a whole entire other alpha cast last fall that was specifically geared towards Quartal, which is the project that Kroetic has been spearheading, and we'll touch on that today, of course, and where that's at now. But if you want to get a deep dive into that, please go back and listen to that. That was last November where we went over a lot of this, and I think we talked about Satoshi Nakamoto. So that being said, so you made a great point about when Bitcoin started in 2008, 2009, 2010, people were running, it was very decentralized because people were running these mining rigs on their own computers in their basement.
Right.
And as that competition increased, as more and more people were catching on, because there was an economic incentive to do so, as consensus started to reach out and to find that there was some value to these little Bitcoins people were earning by mining. And there's the famous story of the guy who bought two
The
pizzas with,
pizza, yeah.
yeah.
Ended up, it was like 26,000 Bitcoin or something for the pizza. I can't remember now, but it was a ridiculous amount now.
And the
Now,
story goes that if he hadn't done that, Bitcoin in 2017 would have been like worth like 100,000 or something crazy. But that being said, you make and I want to relate this because this is going to play in later to the internet. So let me backtrack real quick. The internet, which came back in the early 90s, which is when these cypherpunks were also really nerding out on cryptography and really developing what would become Bitcoin. The internet back in the day, because I had friends that were mega nerds. I was a mega nerd. I was an AD&D guy and all that. I remember my friend, like in 92 or something, 1990, had his own ISP, and he had his own server. Sean McCarty, shout out to Sean McCarty. And he had set up, one of those boards. It looked like a little castle or whatever. And that was the internet. Like, you could get your own ISP, you build your own server out, and you literally are running your own node on the internet. You could create your own email.
Yep.
You just had those protocols. All the internet are protocols. This was before the big launch of AOL and the internet service provider. You were your own internet service provider when it started.
And that's how it needs to go back.
Correct. So fast forward to today. Let me give a quick fast forward. So then as that grew, they needed services for adoption, right? We're seeing this in crypto right now. So the idea was that AOL, CompuServe, all these companies came out to allow people to more easily access this amazing new revolution of technology. Fast forward more, now companies need to be on the internet because you had to serve. You had to have in 2.0, Web 2.0 came out. You needed to have a website so that you could then do business. And so most companies at that time had server farms in their own location to serve their company. And then the cloud came out. The cloud really revolutionized the ability to spin up a virtual private server.
Revolutionized because that's then putting the power back into the hands of the big companies, right?
Yes. So, which I'm getting to right now. So then what that did is it made it easier for, people to use it. But what it's slowly doing is it's corporatizing this amazing decentralized protocol that's the internet protocol. And so now fast forward today, AWS services, which is Amazon's cloud service, is like 75% of all hosting across the world. Facebook and Amazon are really responsible for a great majority of the internet traffic. So what we're seeing now with the internet is a complete consolidation of power with hosting. And this is going to play later into what Quartal is all about, of course. So we've seen the same thing happening with crypto now. So to backtrack again, because we're just trying to give everybody some really good foundation here with crypto. So we had these guys that were, I don't know if you were one of the early adopters. I knew some people who were mining really early.
I was not. I got introduced to it in 2013. So.
Okay. So I actually knew about it before you. Wow.
Yeah,
And
you did.
I kicked myself because, you know, someone who was following, and I know Bear too, libertarian, like back then. Now I'm more maybe anarch. I don't know what I am now. I don't like to put myself in a box, but I was listening to a lot of these alternative, channels that were like Bitcoin, Bitcoin, and somewhat tech savvy myself. I knew about it in probably 2010, and I was gonna like start mining it, and then like Bear, I was just kind of like, oh, I'll get to it, and I kind of just was busy, and I just kind of, I think I was like setting up a mining rig even, and I just kind of like lost track, and I was just busy partying and stuff, getting married and doing all that. So, anyways, but my point is, I knew people who were mining even back then, and it was really just a fun hobby thing. And then as the consensus built and people started seeing value in it, we started seeing what we called mining farms develop and pools. And the idea was people started pooling in their computing power to have a better chance of winning blocks, and so
Which
getting that reward.
ironically is anti-decentralized.
Exactly. Exactly. So fast forward now to today, we have these massive pools with these massive server farms, just like the cloud, just like what happened to the internet, or these mining operations, which are mostly in China, are now running the Bitcoin mining Bitcoin core. And so with Bitcoin, we do have some centralization issues, and I'd like to talk about that a little bit. I'm still a fan of Bitcoin, but we do have some centralization issues with it now. And this is something I'm going to ask John McAfee at the top of the hour if he has concerns about this, because I know he's been kind of bashing Bitcoin himself.
And
So
it's not even really bashing Bitcoin. It's more like realizing that there were some flaws with the initial concept, that there were some really good ideas there, but at the same time, there were some flaws. And to just, if we could get rid of those, then we're in a better place. And
yeah,
that's kind of what Cordal was about. Yeah.
sure. Bear, do you have any questions as of right now? Is this kind of making sense? I know you're a really bright person. I know you're not so as deep into the blockchain, but I'm hoping, for you, this is all making sense.
No, this is good this time. Our last one was good, but it was a little bit over my head. It was a little more
Hmm.
technical. I'm learning a lot with this one, so I'm just kind of trying to absorb as much as I can. I'm really a dinosaur with this stuff because my grandparents. I'm a product of immigrants, and they came over here to escape fascism, and they made good in the country and collected gold. Wouldn't give it up in '35 when they're collecting it. So
Nice.
I kind of have that ingrained in my bones. Just stashing gold and silver, and if I can't have it in my hands, it's
I
not
still think that's
real.
a good idea.
And so, but then again, I'm really open-minded, and I think carrying gold around is kind of archaic as well. So I'm really into this, and my issue now is, okay, I already missed a boat? Can somebody like me still get in? Is this really the
Yes.
way things are going? And those are the questions. I just need more information to know how to do it intelligently.
Right.
Um,
So if I
yeah,
can
go
interject just
ahead.
for 1 second, like
Sure.
that's another thing that when we were building Cordal, we were thinking about, right? Because there can't really be a feeling of, oh, I missed the boat if you didn't get in early. That really can't be that much of a thing, right? So with Cordal, what we've done is we've eliminated the total cap on the coins, so that there is, instead of a cap, there's a cap on how many new coins will be created each whatever period, right? Because there's no time on the blockchain; it's all in blocks. So however many blocks that represent a year, you can then adjust the rate at which the new coins are created. So there's no uh, like fear that you're not going to be able to get any if you become a minter on the network and help secure the network. Then you will always be able to earn something, and there will always be new coins coming in that people can then spend on the various services on the network and so forth. So I wanted to get rid of the idea that you have to get in early, and I like the idea of a cap for certain types of assets. Like Bitcoin will become basically digital gold, and that's fine, because if there's a limited amount, then it's going to have more intrinsic value, and people are going to, it's going to mess with people's heads, and it's going to, make the value go up higher, and there's more money going in, the value has to go up higher. So it makes sense for an asset like that where you're going to be holding on to it. But for an asset like Quartal, where you're going to be using it all the time to run services and it's necessary for these services, it doesn't make sense to me to then limit how many coins will be created. There should always be new ones coming in to make those services always be used.
What we're talking about is deflationary versus inflationary in a way, right? So Bitcoin is capped at 21 million coins. And so what that does is it really defines the value as if in an idea, if there was like a certain amount of gold on the planet, which there is. And so that's that idea of a way to have a value metric that is deflationary, so that it becomes more and more valuable. Whereas, so you're not going to want to spend it because you want to hold on to it. And that's not really great for a currency. And that's one reason why I say I don't really see Bitcoin as a currency, to be honest.
No, that's why I just say it's a value store. It's a place where you can hold your money like gold.
Yeah. And that is part of being a currency. There's three aspects to being a currency. It needs to be a mode of transaction. It needs to be a unit of value or unit of measurement. And it needs to be a store of value, I guess, according to the, if you go to economics school.
Right.
But for me, it's like, what is a currency in the modern era? And for me, the currency in the modern era needs to be fast. It needs to be, in a way, it needs to be able to be spent, in other words, in a way, I almost like an inflationary idea because and I hate to give a little bit of credence to the Keynesians out there, but they do have a good point in terms of the idea of wanting to spend money. Now, I don't think you need to do that with debt. I think you do that with abundance. And so the idea with Quartal, what I love about Quartal is that if you just come in, and we'll give a quick explanation of what Quartal is in a second. But if you come in and support the network by running a node, you can then, over time, as you prove yourself, start what we call minting and literally earning coin that's an equal share across the entire network. So you're not competing like Bitcoin to grab those coins.
It's equal shares in each level tier.
Each level,
So as you level up, you also earn more because you've proven yourself for a longer period of time. So it starts out at a 5% that's split between levels 1 and level 2. Then level 3 and level 4, you get put into a new reward tier, and that is 10%. That's split between all the level 3 and level 4 people. And of course, as you level up, the time it takes to level up also increases, which time on the blockchain, as we discussed, is in blocks. So however many blocks you're proving yourself online, you're a legitimate node, you're not trying to do anything stupid, you prove yourself, you get counted as online. And so those blocks continue to tick up as you're online. And as that goes by, your level increases, your influence increases, your reward increases, and the amount of blocks that you actually secure into the network, which doesn't matter for reward in our case, which it does in Bitcoin, but it doesn't here, that also increases. So the security of the network is driven by the people who have proven themselves legitimate for a longer period of time. And in the beginning, it matters more that the founders, the people who start the platform, obviously don't have negative intent for it, are the ones who secure more blocks into the chain. So in the beginning, the founders are weighted at as if they were level 10 as far as finding blocks. So the founders will find more blocks than more people, but it doesn't matter as far as reward goes. So the people shouldn't care who finds the block. That's only for security of the chain. So we've separated those two things as well in our platform, where Bitcoin has kept them together, right?
So here's a paradox. There's a paradox with decentralization when you're launching a chain, is that if you just came out decentralized right out of the bat, you would potentially have massive security risks, right? Because there's a lot of scammers.
Bad actors could get involved
and
try to, cause problems if they had an influential.
And so those that, are saying this is and to back up with Bitcoin real quick. So the way the Bitcoin, has decentralized, as we explained, is the mining. And then also, we talked about this in the other podcast, is the idea of running a full node on Bitcoin, which is very rare. There's only 10,000 full nodes in the world running Bitcoin. Can you explain the problem with that?
Yes.
And why? Because you're not incentivized to run a node on Bitcoin. You're incentivized to
Right.
mine, which takes now a lot of power, which also has a lot of issues with that, which we
And
can
in order
talk
to
about.
mine now, you do not need to be a full node. You just need to be able to talk to one. So that's why when you're mining, you don't have to sync the chain.
Correct.
All you have to do is point to a pool which has a synced copy of the chain already, and they perform the verification that you've done the work, and they then say, okay, you've won. And so there's also room there for pools to scam people and for people to not even realize it. They could skim money off the top and people wouldn't even know, right? So you have to really trust the pool, and that's where it comes back to it's not decentralized. Sure, there's a bunch of different pools and so forth, but still it's not as decentralized as it could be. So
Yeah.
in our case, we decided that, look, what's the most important thing on the network? It's a full node, right? The full nodes are the ones who have a copy of the chain.
Explain full node.
Okay, so a full node on the network just means that any device, any computer that has a full copy of the blockchain, which you would think, well, shouldn't everyone have a full copy of the blockchain? That's the whole idea, is to be able to individually verify, right? But no, it's gone back to centralizing those who have full copies of the blockchain, which nonsense, right?
Well,
But
and
there's a reason
in
for
all
it.
fairness,
It's the size of the chain, right? Yeah.
well, in all fair, you're getting to in all fairness for we're at the point now where the ecosystem's so big that everyone's really concerned about adoption, right? And making blockchain work, because that's the big negative with blockchain, is that, to get it, you have to get a wallet and you have to download. And the problem with the blockchain that a lot of projects have been really working hard to try to fix with different scaling options, using lattice stuff and different types of blockchains, side chains, etc., is that as you stack these bytes, it gets longer and longer to hold all that. So for instance, the Bitcoin blockchain is like almost 400 gigs now or something. So
I don't know. Last time I installed it, it was 250 gigs, but that was a while back. I haven't
it's like
tried
400 now.
Yeah, it
So
doesn't surprise me.
400 gigabytes. While we have, I forgot the name of the law, as we scale out, it gets, easier and easier to hold the, space on, like, for instance, your hard drives now. I remember, 10 years
Space
ago
is getting smaller and easier.
yeah,
and bigger.
you get a hard drive back in the day, a gigabyte hard drive was like $300. Now you get, that's a joke. Like, you can hold that.
I saw the other day, you can get a terabyte or a 2 terabyte SSD for something like $120. I was like, what the hell?
Yeah,
That's
exactly.
SSD.
So, but my point of bringing that up, and hopefully not losing people here, is that the problem with the adoption of blockchain, like for mobile, for instance, you can't put 300 gigs of a blockchain on your phone. It just doesn't work that way. So, this is what we worked on in trying to make this work. So we have to balance out the centralization versus decentralization for adoption. That's kind of where I'm going to get with the 2.0 that happened, that evolution with Ethereum and stuff, which we'll get to in a second. And that's beyond, and also the beauty of blockchain. But my point is, with your saying, is that what's scary about Bitcoin, that miners aren't running full nodes, is the fact that most of those pools now are based in China. China is an authoritarian government that if they really wanted to, it's over 75%, I believe, of all pools are in China's server farm, in mining farms. And I was getting into this on Twitter yesterday with some people who didn't believe me, but so let's explain what a 51% attack on the network is with Bitcoin, and explain why this can be dangerous. Now, I've heard, without getting too off the cusp here, I've heard that a 51% attack really can't do much because of the way the blockchain hashes work. It would, however, there are a lot of problems with it. And I'll explain what I think a 51% attack is. Basically, the way the blockchain is secured on Bitcoin is that with the mining, it would take over 50% of someone mining everything to be able to change change the next block. Or, well, maybe you can explain this a little better than I.
So essentially, they're measuring the hash rate, total hash rate of the network, which a hash rate is just how fast you're hashing the algorithm, right? So if you have over half, if you have 51% or more of the hash rate of the network, you could potentially secure multiple blocks in a row. right? If you can secure multiple blocks in a row, then you can make modifications to those blocks and then secure them yourself, and the chain's going to agree with you because you're the biggest one on there, right?
Yep.
But because of the power is still relatively decentralized, right? It would take a bunch of these big mining pools getting together and making an agreement to attack the chain in order for this to even be able to take place. So I agree that it's not very likely and it probably won't ever happen. But the potential for it to happen is something that you should get rid of anyways, right? But anyways, if it's
Well, I will say this.
all you can do with it is potentially modify 1 or 2 blocks, and which you think, oh yeah, that's not a big deal, but it could be a big deal if you're talking about moving a huge amount of money within those 1 or 2 blocks. Then yeah, you've doubled a couple $1 million or whatever. Then, but that's all they can.
No, here's the other thing that can happen though, and this goes back to China. Let's say China decides to raid all these farms. They find where they are and they raid them and they force by gunpoint or something crazy that you're going to have to all do an attack. What they could do is spam the network. They could spam. They could spam the network incessantly to drive the price down, cause panic selling, and try to really. It's like the Joker idea. I saw a great video on YouTube last night about this. It's like, I'm just going to destroy it all. Like, it has nothing to do with trying to make money. It's just trying to be like an I'm going to destroy Bitcoin. And if China decided to try to do that, they could potentially attack it in a way by spamming it with double spends on the new blocks to people start panic buying, driving the price down. But of course, the market would turn around as the price dives, and then people start buying it up again. So,
and we've seen this before.
2014.
Yes, this type of attack has already taken place on the Bitcoin blockchain. I don't know if anybody really remembers this, but there was a point not too long ago, a couple years ago, when you could not really send a transaction on the Bitcoin network unless you were planning on waiting a couple hours for that transaction to hit, even though the blocks happen every 10 minutes. And the way that was taking place is that a bunch of transactions were just being spammed continually. And the reason that they were doing this is when they split and did the Bitcoin Cash thing, right? The Bitcoin Cash guys were saying, oh, the block sizes need to be bigger so that each block can have more data and therefore more transactions. And that's how they thought they were going to scale the chain, which is a bad idea. And everybody was against it who was smart. So they said, no. And so these guys said, oh, yeah. And they decided to spam and fill the transaction log on the chain so that it got backed up, so that the miners couldn't keep up. And so that the transactions being processed were too many, and it slowed the network down. And we've seen this attack happen before.
Yeah, exactly. So without getting too much deeper into this, because I think we're already in almost to John McAfee hour, we see that there's a centralization issue. The other centralization issue, Barron, is something I think you'll understand, is that the way to get into Bitcoin, nobody is really mining these days unless you're joining in a pool. It's difficult. So traditionally, to get Bitcoin, you would mine it. But now to get it, you kind of have to port into it via, taking your money, or if you're able to sell products for Bitcoin, that's an amazing way to do it. We try to do that on alphavedic.com. You can actually buy anything with Bitcoin on our website. It very rarely happens, unfortunately. We also accept other coins. But the other way, of course, is taking your fiat, your US or your pounds or whatever, your euro, and then buying Bitcoin with that through a centralized agency. And the problem with that is now the big, point of that is that there was centralized exchanges were created. This was after the Mt. Gox issue, where that was hacked and there was like hundreds of millions of dollars stolen in Bitcoin. So more centralized agencies came on board. They got more regulated, and now we have like Coinbase, which is basically.
So the problem lies in, okay, so now we have a decentralized currency, but the problem lies in getting people to actually switch to it, right? So during that transition period where people are switching from using a centralized currency to using a decentralized one, there will have to be gateways that are centralized, because the only way you can get to the centralized currency is through a centralized gateway. So those are a necessary evil, but they should be temporary, and they should not have gotten to the point that they're at now.
Well, we tried to solve this with Karmaship and Cordal, and the idea is create a new infrastructure, a new ecosystem that doesn't require cash or require fiat, that you literally, we create a new economy through, like with Karma-ship experience and human energy, with Cordal running a node, proving yourself. The idea is
and there will be other methods too that we will add in the future, where you'll be able to have another type of input that is then valued to the network, and you will get a level from that as well. I'm calling it leveling enabled account types, which right now is minting.
Yeah.
There will be more in the future. So for people like, I don't want to run a computer, I don't want to run a node, fine, there will be other ways for you to level up in the future. But you know, we're still 25 days into the launch, so
Yeah.
it gets a little bit of time.
So I bring up the centralized exchanges because what we've seen with Bitcoin is it's literally become completely manipulated by the trading apparatuses that are, not to call anyone out, but I mean, like the Binances, Bitfinexes, especially with the idea of tethering, the Tether coin. We've seen it turn into—
And that was used for a huge manipulation not too long ago too.
Exactly. And so what the problem with this is, it's really taken out the whole decentralized P2P idea of the store of value, and it turned it in just to another stock or into another market. That is what we're literally seeing happening in the mainstream, where banks are literally buying into the market. So they're buying foreign stocks. Like the Swiss franc is now basically Amazon and Google. And the problem with that is it's creating a massive inflationary bubble that is going to lead to collapse. It's all a facade. It's all a big Ponzi scheme. And a lot of that's happened to Bitcoin now, where it's basically become a derivative. And so this is why with Cordal, why this is so important. This is a good segue. Cordal is the foundation behind it, besides the minting, which, and really quick on the mining issue with Bitcoin, it's taking a ton of energy now. I think Bitcoin mining is responsible for the most energy consumption in the world now. So if you extrapolate that out, and even if we do have massive innovations in free energy, which could really change the game there, that's a serious issue right now. So the idea with minting is that we've taken it back to just allowing people on their computers to run the network. Now, with real quick on the 2.0 stuff too. So after Bitcoin, we had this big second revolution where we've really seen the value in the blockchain, because the blockchain has all sorts of other things you can do with it, because it's just an immutable ledger. It's a ledger of truth. So you can use it for you're taking the intermediary out. You're taking the middleman out. So you can use it for everything from voting. You know, you could use it into politics, healthcare, insurance. Now we're seeing the DeFi revolution that they're calling it, which is the decentralized finance. So things like loans, running markets.
Except it's not really decentralized,
insurance.
and they don't understand the concept, and then they're just using words that sound good. But
yeah. Decentralization is like the hottest. It's like alternative health, Bear. It's like, you know, throwing out the hot topic. It's like, oh, we're decentralized because it just sounds cool.
It's like the term DEX, which is one I'm not using specifically for that reason.
Yeah, so DEX is DEX, which is short for decentralized exchange, which is, you know, they've supposedly been around for a number of years now. Now, what we're seeing with this, and I'm not going to call out any projects on here. So
right, I'm going to try not to do that too.
With the Crypto 2.0, we're talking about Crypto 3.0 today. 2.0 was in 2013, 2012, 13, 14.
2013, 14, yeah.
Was where we saw the most, and we can talk about this one because it's really the most famous one, is Ethereum, which is the idea of using blockchain to create a virtual machine. In other words, using blockchain to literally run applications, right? And so the founders of Ethereum, you know, saw this as a massive evolution, but really what they were one of the first ICOs, the first initial coin offerings.
I think they were the
first? I don't know.
No,
if they were the
maybe
first.
Next. Yeah.
Anyways, what they did is they basically created a new ecosystem for blockchain where people can buy into a project through a token. They really kind of were one of the first to bring up the idea of a token versus a coin.
There were a few chains that had the idea of tokens,
Yep.
and some of them called it assets, some of them called them colored coins, some of them called them other different things. But basically all it is instead of initializing your own blockchain, you can utilize another blockchain as a back end and issue a token that runs on that blockchain and that doesn't need its own mining power and so forth because it doesn't have its own chain. But it still has the same decentralized aspects to it, except one key fact that people like seem to ignore and like deliberately ignore is the fact that the assets, when you issue them on almost every platform, I'm not aware of any platform that does it any differently than this. If anybody knows of one, then let me know. But you as the issuer of the asset are the one who controls the entire supply of the asset that you issue. So you can kind of see that that's not like, yeah, I'm like, okay,
Yep.
this works for like stocks, for company stocks. That's like
Yep.
all this really works for.
Centralized.
But right, it's centralized totally. So people were like, "Boom!" But it's not, because they airdropped it out to everyone. It's like, no, there's still one guy who controls the whole thing. And on some chains, you can even say, I can recall assets that I've sent out back to me. So that's a bank. That's what's called a bank, guys. I thought we were getting rid of these.
They're fungible, which is scary.